Okay, those of you, I know some of you come along to our Forex sessions on Tuesday when we do the London session, and you may have heard me say that this month, certainly well, the next few days, weeks, and probably for the rest of the month, the currency that I'll be very focused on, and the currency pairs will be the British pound, because Brexit is back on the horizon, and it's just a great currency to trade, both in cable and some of the cross pairs. Pound yen can be a bit slippery, and a fellow trader told me that it's the subject to a lot of algos. A lot of algos go in there, and it's just it would always, they don't call it the dragon for nothing. It's always been a very tricky pair to trade. But the other pairs, the pound, especially the pound Aussie, and certainly cable, are great pairs to trade. Now, those of you who may be coming along for the first time, what we've done in Forex, we use exactly the same methodology, volume price analysis, and we use the same approach. We have support and resistance, we look at candle patterns. So the analysis that David was doing, it just happened to be the gold chart. But to be honest, it could be absolutely anything. But what we've done with Forex is we've actually taken it one step further, because the Forex market is unique. Of all the four capital markets, first of all, you are trading a pair. So, obviously in cable, you've got the pound against the US dollar. So you're almost looking at two economies, if you like, for the want of a better word. And also, it's a 24-hour market. But you have to be aware that the different sessions, the different time zones, there is a very different levels of participation. You get, you will get more participation at certain times of the 24-hour trading day, and you will get more volume, and you will get, bigger moves, as it were. And you also have to look at it from a local currency point of view. So obviously, pound dollar is going to be very, very active when Europe, London, and obviously when the US is open, as it is now. And as a great example of that was something, just to show you, there's other things you have to bear in mind as well. This is actually the 5-minute chart, which I'm not sure I'm going to be able to. There we are. I'm sorry, it's a little bit squished up, but I thought I don't want to change the time frame on this one, because I have. This is what we call our tick speed ometer, and what it does, it's a bit like the time in sales. Actually, you have this color coding here. When it's green, there's lots and lots of activity. Orange is not so much, and when it's red, as it is now, everything has kind of slowed down in the market. Maybe it's just, in anticipation of a piece of news. Maybe it's the time of the trading day, as it is now. But you do occasionally get a little burst as it comes through. But if you look over here to the start of the London session, oops, just go back again. Hold on a minute. There we are. We've got here. This is London here at 8 o'clock. This is where you've got Europe. You can see here we had volatility, because we had the volatility trigger. Look under here, a lot of green. Obviously, activity picks up, and you have a lot of volume coming in, and then it kind of dies away a little bit, as we see here, between 9 o'clock and then about 11:30. Sometimes it does. Usually between this time there are pieces of news which will be, driving the pair forward. A lot of UK news, if there's the BOE or what have you, etc., etc. But if there isn't, it can go into just sideways, moving up, coming back down, testing various levels. It was around the volume point of control here for some considerable time, and then you can see the activity suddenly pick up here as the US market starts to open 1300, 1330, and obviously the main market opens at 1400. And you can see lots of volatility coming in, lots of volume coming in. The green comes in. You can see here lots of anomalous candles. We've got big spreads, volatility, ton of volume. Nothing happens. It actually goes the other way. Big drop. You can have these really quite big oscillating moves in a pair such as cable, and these are all eminently tradable. As you can see here, break from the volume point of control, then a reversal. It's practically a V-shaped reversal straight back up to the volume point of control and down again, and then gradually the oscillations start to get the waves. If you look at these in terms of waves that are rolling forward, so you have a big wave, and then as the wave comes into shore, it gets smaller and smaller, simply because the energy that was in this initial move is beginning to die down, and also it coincides with the time of day as well. Now, what we've done to help us select the currency and currency pairs, what we've done is we have taken the flows into the individual currencies and represented them with these individual lines on our currency. We call it a strength indicator, but in fact, it's a flow indicator. So we can see when the flows are going into an individual currency, and we see, well, is it being bought? Is it being sold? Is it overbought? Is it oversold? Obviously, overbought and oversold, you've got potential for reversals. And then we've paired that up with the actual pairs themselves. This is what we call our matrix. We see which are the pairs that are strongest, which are weakest. It takes the data from the CSI and it ranks them, and you get these numbers as well to give us an indication of whether that's a strong move or not such a strong move. And what we will be doing with this indicator is we will be highlighting whether the values that are shown here at the top and the bottom, is that an average value, or is it a high value, or is it a low value? Because all the time when we're traders, we're trying to get a sense of, is there a bit of momentum in the move? Are things moving along? And we've also developed what we call the array indicator, which is it's more like a trend indicator. It tracks more the trend of a pair. But what I'd like to focus on at the moment is actually the CSI, because the CSI is such a clever indicator. Not only does it capture the flows of the individual currencies and gives us these big, potentially big reversals, if you like, where we had the Kiwi going higher and higher and very overextended before it rolled over, and it was actually the best pair to trade, certainly this morning, was the New Zealand yen. And the New Zealand yen is a risk currency pair, so as the indices were moving higher, that was a good pair to trade. But if it's going to move over to the NinjaTrader version of this indicator, because this indicator, it tells you when there is a potential move in the sense of, as we can see here, overbought, oversold, potential reversal. You look at the chart, you see, yep, that's going to be a good move. And then, like all moves, it kind of goes sideways a bit, and then it perhaps goes when they go parallel to each other, and that usually signals that it is in congestion. But there is one aspect to this indicator which is really, really clever, and that is when you get a cross. When the pair has been in a congestion move and you get a cross on the indicator, that is usually a really good signal to tell you that this particular pair is possibly going to break away from congestion. I've been looking at this certainly on, I use the 10-minute chart, I use the 3-minute chart, and I also use an hourly chart. What this indicator also has, it's got an alert system on there. So when there is a cross on a particular time chart, what you do, those of you who have the indicator, you go into the indicator and you pull it up there, and it says detect crosses, and you have this sort of klaxon comes on. It can be a little, it can sort of, it can, yes, it frightens the dog actually, Bertie up. Bertie dog is not very keen on it, and I'm going to have to turn it down a little bit. But it's great because I don't have, I wish I could spend more time in front of my screen, but I can't. But I understand chart structure. I understand, obviously, VPA. I understand Wyckoff's 3 laws. And for me personally, when crosses are what I'm always looking for, because particularly when they are coming when they are coming at a point of on a congestion, and I'm going to get a divergence. And by divergence means I'm going to go one way or another. Now, what I've done with this, with the CSI on the 10-minute chart, rather than have all the lines on one chart, because the thing is firing off at all different times, and I don't know which pair it's referring to, what I've actually done is I've isolated the currency pairs. So this is my Aussie yen, this is my pound Aussie, that's my Aussie dollar, that's my CAD yen, that's my euro Aussie, and this is my pound Aussie. And I'm going to put some of these up certainly in our VPA room, those of you who are our students, just to show you the power of this of this approach to using the CSI, because it really does help you with, first of all, you don't have to be tied to your screen. I think on MT5, you can set it up on MT5 as well. It's a little bit more complex on MT5, and I think you've got the option of actually having the alert coming on your phone. It's not something I've done myself because I just haven't had time. I'm just using it on Ninja at the moment, and I'm just looking at cable. It's just an alert. It just tells me something is going on in this particular time frame. I should pay attention to it, because I'm not often, when I see this and you see this at these lovely reversals, I possibly wasn't at my screen for whatever reason. Maybe I was, doing an email, or my grandson was here, or something. But at least with a cross, I know that, if something is going to happen, and I also know that the likelihood is the price action would be in a congestion phase, and in a congestion phase, following a congestion, that is where trends are born. Now, I'm just going to push this back to a normal, because I just want to finish up with, this is a little bit more I want to tell you about about cable. Now, we know cable is more actively traded at certain times of the trading day, and you can do this research. This is what I suggest. This is what we suggest to our students, and I suggested it on Tuesday as well. And I'll probably revisit this in subsequent webinars, because we have people joining all the time. You want to give yourself the best possibility of, when you see a setup on a chart, that is actually going to follow through. Because you can have a good setup on a chart, but if it's not at a time when, there's a lot of participation in the market, you're going to be sitting there, and it may, some other beat of news might come along, and the setup disappears and is never and never follows through. Basically, at investing.com, the UK version of the site, you have this volatility calculator, and you simply pick the pair. And what's interesting, there's also a silver and gold. This is when you trade silver and gold as a CFD, but you can it's just as good as the futures, and a lot cheaper. Anyway, you put it in, and what it will put up, this is based over a 10-week period. You can change if you want to know 6 weeks, or you want to go longer, but 10 weeks is okay. It basically tells you the daily volatility in pips. What is this pair likely to be doing, and is this rising or is this falling? And what it tells you, if it's falling, what it tells you is that, and it can often happen, particularly with the euro dollar, where on a daily basis, the number of pips, that are traded are getting fewer and fewer. It really makes trading very, very difficult. Cable has always been fairly consistent. With Brexit, these values can go up exponentially. What it also does, it then confirms the pattern, the trading pattern that we saw on the chart. So we can see here, 2 o'clock. 1 o'clock, 2 o'clock, the start of the US session, the start of London, 7 and 8. Also be aware, you can see here it carries on to 3 and then to 4. That's what we call the London fix. So there are 3 times during the trading day when this pair is particularly active. Now, this makes your life hugely, it simplifies your trading day if you are a day trader, because you know you if you want to sort of do other things, as it were, you can say, okay, and even if you have a job sometimes and you have the opportunity, if you just trade the London session or maybe the US session, that short period of time, you know, because you can only do this on a part-time day, well, it makes a big difference. It also tells you the days. A cable is fairly consistent, actually. Thursday is always a good day. Friday can be a good day. Wednesday's not such a good day. But you can do the same exercise. Let me just have a look. With Pound Aussie is the one that I am very fond of. Pound Aussie is quite interesting because it has been delivering, you see, 212 on a day. That's a lot of pips on a day, but it's been falling, and it's been falling because it has it's now going into a congestion. On the daily chart, it's been a sharp downtrend, Pound Aussie, but the candles have been getting smaller and smaller and smaller. So, and that's been falling. I'm hoping it's actually going to turn back higher. You know, these things go in phases and waves. But again, very similar pattern where you have a lot of activity at around 2 o'clock. But look here around midnight and 1, because it's got the Aussie in the pair. Of course, you would expect more participation at that level. So that's that. Just take that down. Now, what I wanted to show you about pound dollar cable is there was a really nice little setup. Came in on the 3-minute chart. It was also a little cross alert on the CSI, and it was this. There was a sort of a breakaway lower from the volume point of control. It's only this 3-minute chart, and we can see here we've got the break, we've got the candles coming down, and we had reasonable volume, and the volume, you know, consistent with what. So suddenly it hit this the support level here. This is volume-based support off the volume point of control here. These are these sort of lines, these shaded areas that we have here. This is support based on volume. The hatched lines is support and resistance based on price. And I thought, oh, well, that's interesting. It suddenly just came to a halt. And this is where you have to look at multiple time frames. You also have to go and look at the Camarilla in multiple time frames. And two things that came. As I said, I use the 3, the 10, and I also use the hourly chart. The hourly chart is like my benchmark chart. The hourly chart is interesting because we've had a lot of volatility in this pair, as we saw on the 5-minute chart, and it's been bouncing between the R5 and the R4. And the reason it stopped is it stopped on the R4 on the hourly chart. You know, I said earlier, the 4th level of the Camarilla is a key level. You know, it sometimes has difficulty in breaking through. It will often, you know, test and then, you know, just fail to break, and, you know, you can take a reversal off that there. We're also, you know, we're coming into a quiet time, so possibly this isn't going to go any further anyway. Then I put the version with the time-based chart on it. Let's have a look. 60-minute. Yeah, here we are. And what I do with the indicators, and it's just a suggestion, if you use multiple, hope you use multiple time frames, is rather than crowd out your charts with all the indicators on all the charts, is you know, split them out into you know, different charts of the same time frame, and you know, you get to these are my level. You know, these are the levels on a chart. These are my you know, this is my trend monitor. This is my trend dot. You know. Just try not to clutter all your charts, although this one does look a little bit cluttered at the moment because I haven't cleaned it up. But what's interesting is this was the R4 on the hour, but what it also coincided with a very strong level of support, which is the blue hatched line over here. This is our accumulation and distribution indicator. And what this indicator does is every time that level is tested, this hatched line will get thicker and thicker and thicker. And what that means is you're going to have an awful lot of volume if you are going to break further down to the downside. And what's also interesting on the 60-minute chart is the price action is actually still within the spread of the volatility candle. The volatility candle, the high and the low of the volatility candle gives us another level of support and resistance. So it's a bit of a struggle at the moment for pound dollar. And what do we have here? It's going, they're kind of going in, you know, pound is being bought. You know, I can see here, I can go over here and I can isolate it on my matrix, if it will let me do it. Probably not, because I've, oh, there we are. Here we are. And where are we? Well, where is this pound buying at the moment? That I can see this turn up. I can see the dollar's really not going anywhere at the moment, but I can see a turn up in the pound. I can look over here and I can see, well, against the New Zealand, it's certainly. And where is the pound dollar? Let's have a look. There we are. It's sort of, you know, languishing down here, but it's languishing down here because it's at a point on the chart, significant levels on the chart where, you know, it's going to need a little bit of oomph to actually either, you know, reverse off those levels or break lower from those levels. And having all that information, having seen, as I said, this really nice opportunity that came up on the 3-minute chart. It wasn't, you know, it was, for the time of day, it was fine. It was out of the optimal time for trading this pair, but it was a nice, you know, it was a nice little move. The Renko also, you know, highlighted as well, which is our non-time based chart, and it's now I know why it, you know, nothing came of it. In fact, the VPOC has moved down, and this level has also, you can see, has also developed. So we've got price-based support, and now we've got volume-based support, and we've got the trend monitor. So possibly we are now reversing higher. So how you use volume price analysis, our quantum indicators, support and resistance, not just using price-based support and resistance, volume-based support and resistance, and the Camarilla indicator in multiple time frames. I said on Forex, but, you know, as we saw earlier, also on the NQ.